Canada's economy is in major trouble as the reliance on real estate and government is coming to haunt it. So we're going to get into what is going on here. So let's start off with what's going on with wealth in Canada and where the majority of wealth is being held. And I know you're going to guess this one. So anyway, Canadian households were wealthier on average in the first quarter of 2024, according to StatsCan. Net worth, or the value of all assets minus debt, climbed to $548.2 billion, about 3% to $16.9 trillion, driven by strong equity markets and a rebound in home values. It's very interesting, actually, because when you look at what happened with home values, you know, they went up $1,000 when you average it across Canada, and then they came straight back down even lower than they were in January. So I do not know what they're really pointing to in this article, but anyway, we'll take them at face value. Overall, the value of residential real estate rose $213 billion in Q1 after two consecutive declines in the second half of last year. Meanwhile, investors reaped the gains from the stock market, such as the S&P 500 that was up over 10%, and the S&P TSX, which was up 5.8% in the quarter. And they're talking about Q1 2024, by the way. The gains are not evenly spread across Canadians, the agency noted, meaning they reflect the financial success of a few households as the wealth gap in Canada continues to widen. And might I add, the economy continues to worsen. As of the fourth quarter of 2023, 90% of Canadian wealth was in the hands of those who own a home as their primary residence. I mean, it's not a shock really, is it? But it is, quite frankly, should be scary to these people having all their net worth in real estate built on a housing bubble and hoping that it somehow sustains itself, even though that has never ever happened in all of history. Even China's real estate bubble, that was arguably bigger than Canada's, is collapsing and imploding on itself. All these bubbles, eventually rubber meets the road. And the fact is, 99.9% of the time, it's the economy being in dire straits that take down these bubbles, because the economy becomes more and more dependent on them as they rise, and it becomes a self-fulfilling prophecy in that sense. So, you know, it's really logical when you think about it. And yeah, I'm not sure where they're getting that data from. Maybe it's some kind of one of these funny indexes that they use that uses really laggy data or something like that. But it's interesting nevertheless. So if we look at RBC and what they're saying, they're actually saying here that the bubble, the amount of income that it now takes to buy a home, has increased beyond what it was in the 1990s bubble. And they show you on this chart. So this chart's from RBC. I'll link it below. It's on Better Dwelling, because now you are higher than obviously the 1990s bubble here, which is interesting because obviously that bubble sent prices down 40-50% in places like Toronto, and people don't even realize. I mean, I did an interview with Hilliard back in 2022 that I re-uploaded to the podcast channel, and when I was listening to that back, I asked him that question about the 1990s bubble, and his insights were amazing on the topic, because obviously he knows a lot more about that than I do, and I would highly recommend to go check that out. I'll link it at the end. Be part of the 1% that actually does that, because you'll really enjoy that. There's so many valuable things that he talked about in that interview, and that's why I did a re-upload on it. So anyway, you've got like 60 to 70% of income. I mean, this is just totally unsustainable. And even the condo down here, which you look is just above 40%. Guys, think about it. Condo fees are absolutely insane. They weren't like this in the 1990s. Obviously, condo fees would have been more reasonable back then because of inflation or the government intervention that we've had since then. Condo fees are excessive. I mean, in some places, people are paying in excess of $1,000, even in excess of $2,000 per month for a condo fee, which is quite frankly insane. And that condo fee is just going to go up with the rate of real inflation over time, because it doesn't matter what the government tells you inflation is with the CP lie. It matters what real inflation is, because that's what the condo board has to pay for repairs and everything else. So buying a condo is probably the worst inflation hedge on the planet in that respect. So anyway, you can see that obviously the aggregate and single detached going over 70 70%. I mean, this is totally unsustainable. Nobody can obviously afford that. So obviously you've also got the economy that is worsening. We had jobs numbers that came out, and we had the job vacancies numbers that came out a couple of weeks ago. Job vacancies, which measure the number of open positions among Canadian employers, fell to 575,000, a 28% drop from 2023 at the start of 2020. At the start of 2020, vacancies stood at 582,000. So we're even lower than 2020. And the economy wasn't exactly in a good place back then either, when you look at what was happening with GDP growth. And predictions were made in Q3 and Q4 of 2019 that Canada was going to go into a recession in 2020 anyways, before the pandemic hit, and they started the unprecedented amount of stimulus. And then when you look at the GDP per capita and what's happening there, when you're talking about people holding 90% of the wealth, which I've said many, many times, you have to bring it back to this and think that this is a lot worse than this chart suggests, because it puts everybody as equal, and everything is far from equal in an economy where it's basically like there are two classes. There's the people who own homes, and there's the people who don't own homes. And this really shows what's going on, because if you imagine that this is for, let's say, the 90% of workers, not the top 10%, and you just strip them out of this, you would have this crashing way down here, which illustrates what we see on this channel in this economy. Why there's so many homeless people, why there's so many people with mental issues right now all over the streets. I mean, it's absolutely crazy. Why crime is rising so much. I mean, if the economy's so great, why is crime rising so much in all major Canadian cities? And now I want to show you this, because this just is mind-blowing, and it comes from the Fraser Institute. Again, I've linked it below. You can read the full report. But they basically say how government is 40% of the economy. So the size of government relative to the economy among the provinces ranged from as high as 63% in Nova Scotia to a low of 26.8% in Alberta. For Canada as a whole, the size of government represented 40.5% of the economy. That is just absolutely insane in itself. So with government and real estate, that is over 80% of the economy. So what is left? What is productive? What productive economy is left in Canada? If you think there is one, you're living on a different planet. And this is what happens when you essentially have this credit bubble that increases to the size it's at in Canada. You have more people going to become mortgage brokers, more people who are going to be real estate agents, more people who are going to be photographers for those real estate agents, more people who are going to do staging, all these different things. The real estate industry directly affects many other industries. So the knock-on effect on the economy are far and wide. I mean, if people's housing prices are going up, if they're being asked to put up $50,000 from the bank because they're upside down on their loan, are they going to be going and buying a hot tub? Are they going to be redoing their deck? No, they're not going to be doing any of those things. The only people who are going to be doing those things are the older generations who have no debt and have paid off their homes. And in many cases, they are co-signing on their kids' mortgages and lending them mortgages in order to get into the real estate bubble. I mean, it's got to that insane size in Canada, and much of these gains, as I've discussed before, have actually been wiped out. You're talking about significant gains that have happened. We've been over this many times, but you've gone from $836,000 all the way down to $719,000. That's a big jump, but it's an even bigger jump when you look at condos, which are the most speculative thing. It's an even bigger jump when you look into the major bubbles like Toronto and Vancouver. So this bubble is unsustainable, and the economy has been built around it. And that's what people don't understand. When it implodes, the economy goes with it. And that's exactly what is happening. And it becomes a reinforcing loop and cycle, exactly like we've seen in many other cases when bubbles have actually popped in the past. So anyway, if you want to see that interview with Hilliard, I'd highly recommend that you watch it on the podcast channel here. And if you're looking for a VPN to protect your privacy, go to expressvpn.com/marketmania, and I will see you in the next one. Take